Hello and welcome back to followers of the Kaspa journey. I've been getting multiple requests to do another video on power law and another video on sort of price action. So we're going to be getting into some technicals today and looking at the price action, the 8-month cycle, Kaspa's power law. We'll have a quick look at Bitcoin, and then we'll also have a look at some wider macro stuff to try and figure out where we are going to go from here. But before we get into it today, guys, don't forget to like and subscribe. And also, if you are interested in some of the indicators you see in this video or more analysis like this, don't forget to check out the Patreon. So first of all, we'll have a quick recap. So Kaspa was consolidating against its all-time high, bumping up against it, forming this essentially wedge pattern or ascending triangle pattern. This pattern looked very similar to the move we had in October of 2023. So most people were also expecting that this pattern here was going to lead to a similar move to this pattern here, which would have looked something like this. However, we have instead broken down out of the channel, coming back down to 12.5 at the very minimum, but then having a quite quick bounce back up to the 16, 17 area. So based on the 8-month cycle for Kaspa, we are expecting and have been expecting a pump to come, and then basically the next impulsive move and the next phase of price discovery. However, based on past historical price action, we are now very late for this. So if we take the top of this peak to the top of this peak, that was 205 days. And then if we take the top of this peak to the top of this peak, that took us 231 days. And then if we extrapolate further, we are now 265 days out. So while the cycles for Kaspa have been lengthening, currently there is not enough data to know by how much they are lengthening by. So one possible theory is that Kaspa's cycles are experiencing essentially a lengthening cycle, and this could be due to the higher market cap and the higher liquidity requirements that Kaspa now needs to go into that next phase of price discovery. It's essentially 3.5 billion market cap, which isn't huge, but it's no longer sort of the micro cap that it was back in these days when it was going into price discovery. So that could be one explanation, that basically we are just seeing a lengthening cycle on Kaspa, and that each cycle we are going to need more and more time to see the cycle play out and to see the next impulsive move. And so that is certainly one theory and one possibility I have been looking at and been considering. Another possibility is that we may see something like a right translated cycle for this major cycle that we should be going into. So if we get up the full model version 2, this model would predict us to be peaking around about now, in a few days or so. However, because Kaspa cycles are smaller than Bitcoin cycles, and the forces that go into Kaspa cycles are less powerful than into Bitcoin cycles, it is possible that Kaspa cycles are much more able to be influenced by external events and external factors. So, for example, the failed launch of KRC20, which happened on, I believe it was around the 30th of June, maybe the 1st of July, well, that could, in theory, be an external factor that prevented the cycle from playing out and the impulsive move from happening. So it is possible that we are looking essentially at a failed 8-month cycle, and that we are simply now going to need more time to consolidate and to go into our next cycle and to go into the next impulsive move. So that again is one possibility. And then it is also possible that we have something like a right translated peak, so that the peak comes slightly later than we were expecting, and that again could be influenced by external factors such as the blow up of the Japan carry trade, which essentially caused a huge scramble for collateral and a huge scramble for liquidity. And that is why in this recent environment everything went down. Even gold went down, which is very rare to see gold having correlation with the stock market like that. So what that implies is that this essentially was just a mass liquidation caused by the yen carry trade. I can talk about that a bit more in another video if you guys would be interested in that. But because of that mass liquidation, everyone was scrambling for collateral, and naturally, as a result, the stock market got sold off, which caused Bitcoin to get sold off, which caused then Kaspa to get sold off. You know, as you go out further on the risk curve, the riskier assets are going to get sold off more. And so while Kaspa cycles are unique and are a powerful force, they cannot escape global events such as the blow up of the yen carry trade. And so that is a possibility that this is essentially just now a cycle that has failed, or potentially a cycle that is now looking for a right translated peak. So we're going to now look at the power law, because there's been a lot of people worried that the power law has broken down. So my original power law indicator, the Kaspa USD power law bands, this was based off data from around February, March time. So when we look at the bands, we did have this 1 wick down, but we have now reclaimed the lower band. So, you know, I wouldn't even really consider this to be an invalidation. We've had wicks below it before, for example, here, for example, this one, although this was, you know, a very short-lived wick. And then we've had small periods of time outside of the bands in the past. So this has, in my opinion, not caused an invalidation of this. However, because a power law is created from price data, and the price data determines the exponent and the slope of the power law, then because we've spent now this extended period of time below the power law fair value since February, March time, that has actually pulled the exponent and the slope down of the Kaspa power law very slightly. So what that means is that the future expected growth of the power law has decreased slightly. Not by any sort of significant amount in the long term. You know, end of 2025, we would still be expecting around $3 for the upper limit. So that's not too different compared to what we had before. However, when we compare this basically to the original fair value, we can see that the fair value has actually decreased ever so slightly based on this price action of staying below the fair value. So the expected future growth of the power law has decreased slightly. So based on this, and based on the new adaptive power law model, we can see that the power law is very much alive and well, and that we didn't even have a daily close below the lower band, and instead it was just a very short-lived wick, which we again have had many times before. So when people are sort of saying the power law has been invalidated, it absolutely has not. It still has an R squared of 0.9537, which is an extremely strong correlation and is only a very small magnitude below the R squared of Bitcoin's power law, which is 0.96. Whereas, you know, you compare that to something like Ethereum, the R squared of a power law calculated for Ethereum is 0.8. So, you know, both Kaspa and Bitcoin are worlds apart from the rest of the market in terms of power law. And the Kaspa power law is very much alive and well, with still an extremely strong R squared. So based on the current Kaspa power law and the latest data that we have available to us, the current fair value is 0.251, so around 25 cents. The current lower band is around 13.8 cents, and then the current upper bound is around 56 cents. So, you know, we are currently sitting fairly far below fair value and fairly close to the lower band, meaning if you do believe in the power law and you do have some spare cash and you are in it for the long term, then potentially that this is a very good place to start dollar cost averaging. You know, of course, not financial advice, but that is what the model would indicate. So looking at the relative strength of Kaspa, this is Kaspa divided by the total crypto market cap. And as you can see, we have had this very, very nice move over the past 3 to 4 months, putting in basically higher highs and higher lows. Basically, we have been in an uptrend against the rest of the crypto market since early May. And this trend line has held very well, and so indicates that the uptrend may well be continuing. You know, we have been in a wider downtrend since November against the rest of the crypto market, but that again indicates that Kaspa has a much lower correlation to the rest of the market than any other crypto out there, and basically sort of trades on its own and just trades as its own asset, because, you know, when it's time for the rest of the market to move up, then Kaspa doesn't necessarily follow that, which has been a great source of complaint. But then at the same time, Kaspa has been having this incredible move against the rest of crypto. When crypto has been relatively flat and stagnant, we are up almost 100% from the lows. and we only have around 25% to go until we make an all-time high against the rest of the market. So, Kaspa continuing to show incredible relative strength. However, with that being said, but purely from a technical analysis point of view, this certainly is a technical breakdown. So I wouldn't be expecting to make all-time highs, within the next week or two. I think that we will more than likely need a little bit of rebuilding and a little bit of reconsolidation until we can tackle those all-time highs again. But, I very much do believe that they are coming. So Bitcoin has broken down below its previous 60-day cycle low. But again, this, in my opinion, was purely a liquidation event from the yen carry trade. So it's not a surprise that we had this huge spike in volume and this huge liquidation event. However, we have now reclaimed 60k and 61k fairly nicely and fairly confidently with a pretty big candle here. So traditionally, we would be looking for the next low of Bitcoin to be around sort of the start of September time if we are going off the 60-day cycle. However, it is possible that this is a very early cycle low at 31 days and that we are able to actually continue higher from here. But equally, it is possible that we do need the full 60 days. However, if we did see a cycle low on day 60, then more than likely that cycle low will be below the 49k level. And if Bitcoin does significantly break this level, then we will likely be coming down to 42, 43. However, while this is not a call, this is not financial advice, in my opinion, that was the low, that was the liquidation event. So the Fed balance sheet is still ticking down and trending down, indicating headwinds for liquidity. However, there has been other methods that the Fed has been injecting liquidity into the system. So the balance sheet is slightly deceptive at the minute because liquidity is actually ticking slowly up. Fed current interest expenditures is something I keep track of because this is basically the amount of money that the national debt is costing the US. So currently, the US is paying around $1 trillion purely to service the national debt. And $1 trillion is around 25% of all tax receipts. So the only way that the US is able to pay this really is by issuing new debt, which again will be a positive source of liquidity. M2 is ticking up slowly, so that is an overall positive for liquidity. So there's really now two possibilities going forward. Possibility one is that this credit event and this mass liquidation has actually broken something, and that something in the global financial system has broken and things will get even worse. And this basically was just the beginning. I've seen different theories about where that could come from. Credit spreads and also sort of junk bonds is one idea that I've heard, which certainly could be a possibility. And so in that case, if that is true and something truly has broken, then likely we do have another liquidation event and this move is not over. However, you can be sure that the Fed is trying to do everything they can to avoid that, because if they do have another massive credit event like 2008, then that is going to make the US national debt much more difficult to tackle and much more difficult to handle and service. Because if GDP goes down, then not only are they going to have to take out a huge amount of additional debt to try and reverse that trend, but because the GDP is going down, the current debt to GDP ratio will actually grow. So the US national debt will skyrocket if there is another severe credit event, which you can be absolutely sure that the Fed is trying to do everything they can to avoid and to prevent that. Even if there is something out there that's broken and contagion is likely spreading, the Fed will be throwing money and liquidity at that. And the liquidity cycle is not over and it's not due to end until the latter part of 2025. So my medium to long term is still bullish. So overall, Kaspa holding up very nicely against the rest of the market. Everything has taken a little bit of a nosedive, but Kaspa continuing to show incredible relative strength. So while it is possible we do come down and test these lower bands one more time at around the 13.8 area, I don't think that that can be guaranteed at all. So remaining long and strong, expecting this move on Kaspa to be in the not too far future. However, we do need some technical rebuilding, so also not expecting it to be imminent. So that's how I'm seeing the markets at the minute. If you do like this content and you want more of it, don't forget to check out the Patreon, where I put out videos like this and specifically looking more at Kaspa, and also post updates in the Discord. So if you are interested in that, don't forget to check that out. But otherwise, thank you very much for watching, and until next time, cheers.